the festive season and sports season as well. So Nita Kapoor will also join us shortly, head of the Wines and Spirits Association, and Karan Taurani, who looks at the space very closely, analyzes it when he's watching matches or movies, because that's what his full-time job is, to analyze the entertainment space as well. Karan, did you check out how the Sula Q2 updates actually came in while you were watching your favorite movie or your favorite match?
We've not checked out Sula, it's not on the coverage, but we are like broadly positive on growth rates in the wine industry.
Yeah, so let's talk about that. I was discussing with Aisha and Awan earlier in the day that predominantly on consumption pattern side, India has been a country of hard liquor drinkers. Wine is overall a new subject as genre, and then within that, I mean, somebody was telling me that for every liter of premium whiskey, just 1 teaspoon of wine is consumed in India. What kind of growth has emerging markets seen on wine globally? Because after all, same kind of patterns will play out here in India as well.
So I think the wine segment particularly will see very strong volume growth. If you look at the overall industry in terms of spirits, the volume growth has been in the range of 4 to 5%, which is mid to low single digit. But specifically, if you look at wine, I think in terms of volume contribution, it's still very small. It's just about 1% odd in terms of the industry size of spirits. Now, the growth rates herein would be in the range of 12 to 15%. The reason for that is twofold. One is what we are seeing is that the consumption is going up in the existing cities, which are metro. So one has to not forget the fact that wine is more metro-led. There are top 7-8 cities which contribute a large chunk of the wine revenues or volumes rather. So I think there is increased consumption. That growth rate is somewhere close to 5 to 7%. The balance other half of growth rate will be led by moving into newer markets. So wine has got a very low penetration as far as tier 2 and tier 3 cities acceptance is concerned. So once we see that picking up, we'll see volume growth, moving towards 12 to 15%, and that's what is happening currently.
So introduce then Nita Kapoor, CEO, International Spirits and Wines Association of India, who joins in on the discussion. Nita, I just wanted to start off by talking about the UK-India FTA that's expected to be signed by the end of this month. Can you just explain what the implications of this could be on the alcohol beverage industry, what it means, how beneficial it will be, if at all?
Good morning. Yeah, sure. So with respect to the UK FTA, the major benefit is going to be on account of the bulk that is imported into the country. As the bulk imports into the country, you will see that all the Indian players will have a major cost benefit because the duty would be rationalized, hopefully, on the bulk also. Second is the consumers will get a lot more choices because you will have the finished product coming in even from smaller distilleries based in UK. So that means that there will be more choices for the consumers here. Third is all the allied sectors of alcobev, i.e. that you look at tourism, travel, food and beverage, agriculture, all of these will see an increase in demand and hence therefore contribution to the state economy that we contribute to. So all in all, it should be a win-win situation for both the countries.
Okay, fair enough. Let's also get in a sense from you then as to how you're looking at overall domestic players, Nita, because they have raised concerns about a surge in the bottled scotch imports in the recent years without a reduction in the import duty. Now with a possible reduction in import duty, isn't this a bigger threat coming in for the domestic industry?
So this is what I call, is essentially a misconception or a misperception being created because all the players in this sector have a significant domestic base. Whether I would talk about international players who have consistently invested in the countries or domestic. So it's very difficult to differentiate between who's domestic and who's not domestic, particularly with respect to the sector that I work in, which is the alcohol sector. So if we start with that premise, then we should be looking at the fact that how is it going to benefit the sector overall, how is it going to benefit the industry, the consumers, the state? I would, in fact, look at the FTA from that perspective. In terms of competition, look, I mean, we are talking about a Scotch segment, which is what, roughly about 2.5, 2.8% of the entire industry. And there is no way that, there should be any threat from the Scotch brands to the domestic local brands produced by our members, as well as the other association members. So clearly, I mean, no, I don't think that's a threat at all.
Karan, what are your thoughts on this matter? It's been going on for some time now, and now by month end, the expectations are that Rishi Sunak would visit in India, and actually this could be sealed. On the one hand, import of bulk bottled Scotch, and also export opportunities of Indian players, especially the listed ones, United Spirits, Radico, among others.
Two things here. I think in terms of broader positive impact, one very big positive impact is that the price of bottled Scotch will come down, which is BIO and BII. Now, if you look at the price of bottled Scotch today in India, there is a 50% premium versus the duty-free prices. If you look at it on a like-to-like basis, on a per ml basis. Now, this gap will, converge somewhere towards 25 to 30%. And for example, in the case of Maharashtra, which is a large state, the gap is already down at about 30%, which will probably move to 15%. So I think this will lead to a big boost in terms of consumption of Scotch, offtake of Scotch, which will have a positive impact in terms of United Spirits for potential volume growth, because they are the market leaders as far as Scotch is concerned. The second impact is also that this will also have a negative impact in terms of upper prestige consumption. So if you look at something like a Blender's Pride, which is currently termed upper prestige, the gap between a Blender's Pride and a red label is 30% today, just a broader number over there. This gap will also converge towards 15%. So I think Scotch offtake will really multiply in a very big manner. And that's one very big positive delta which is there. But this will only happen if this kind of benefit is provided to the customer by the company, if the states don't expose any kind of increased VAT or excise, after this duty cut of UK FTA which comes in. The second big impact is around profitability of UK FTA, which is going to be on the margin. That's because most of these companies, procure a lot of bulk Scotch. Now, bulk Scotch, if you see, is somewhere close to 4 to 5% of COGS for most of these companies. And after UK FTA, the prices of bulk Scotch will somewhere come down close to 30-35%. So basis that, there could be a positive impact in terms of EBITDA margins for most of these companies because of bulk Scotch as well. So the impact is twofold here. As far as exports are concerned, not a compelling play as of now. Obviously, in the future, things could pick up, but as of now, it's going to be more limited to high-end single malts, which are very small in terms of overall volume. So the overall big impact will not play out because of exports.
Sure, fair point. But that's an area where over the long term, perhaps things could change. You must have read about Indri, how it is making waves among the top, world's top 15, 20 names. It's a small little listed company. I mean, we came to know about it later. But on valuation front, a quick follow-up there, Karan. Radico versus United Spirits, how are the valuations looking? Do they capture these potential triggers or not yet?
So I think in terms of triggers, United Spirits, the core alcobev business currently is trading at close to 54 times forward PER. Now the potential upside is if you roll over to FY26, that's one, because there is a constant potential for this company to grow at 12 to 15% in terms of earnings because of the strong volume growth. So I don't think the entire positive impact of UK FTA has been factored in, because UK FTA will broadly lead to revenue growth upgrade of somewhere close to 8 to 12%, because it will have a positive impact in terms of volumes by not more than 2.5%, but your realization per case will see a bigger delta in terms of positive impact. So I think you could see an upgrade of 10 to 12% in terms of revenue, which will flow down to your earnings. But the problem here is, if you look at their BII and BIO portfolio, that is capped at a margin of about 10% and which may not lead to a multiplier effect in terms of your potential EBITDA. So I think in terms of earnings, it's more of a mild, flattish or a muted kind of an impact, but revenue growth will definitely multiply, because I think the Scotch portfolio after the UK FTA could grow at 35 to 40% for a company like UNSP. Now, as far as Radico is concerned, they don't have much of exposure to Scotch. It's more domestic-led single malt, wherein if the exports pick up on that very small base, which is less than 500 million cases, you will probably have some delta impact because of exports, but that's going to be very small. The bigger impact for Radico and UNSP both will be around profitability, which I told you, the bulk Scotch prices coming down. And I think basis that there is a potential earnings upgrade of anywhere close to 4 to 10% because of bulk Scotch prices coming down post UK FTA.
What about the industry grappling with high inflation, high taxation on ENA, barley, for instance, packaging materials? All those prices have risen multifold over the last few years. How do you see this impacting the industry? How are they dealing with it? Is there some sort of a moderation that's expected in prices soon?
So that is in fact the biggest challenge in terms of what is happening to the cost of the direct material. So for example, if I was to look at an ENA base, over a 5-year period, the ENA prices have shot up at around 11%. Just this morning, the news is that ENA from molasses will again be increased at about 3%. That's the inflationary trend that the news is reporting. So that is one challenge. Or glass, in fact, if I was to look at it, which is one of the fundamental materials of the industry, is up by about 29% over a similar period. Now, the problem is here, because alcobev is the liquid economic engine of a state, the state controls the maximum tax on an MRP. So you will see that about 60 to 70%, and in some states, right up to 80% of your MRP goes to the state as far as taxes is concerned, leaving very little margins for the trade as well as the manufacturers. Now, there are some states who have not given a manufacturer a price increase for the last 4 years, 5 years. Some do it selectively. Now, that is the biggest challenge. Whilst volumes will increase, the margins are diminishing. And that's our job as an association. ISWAI is continuously engaging with states, sharing the data to say, please look into this and have an inflationary model for the manufacturers of alcobev. And I hope, this comes about to say that let this industry, like an FMCG industry, look at an inflationary model and have a free pricing. So that's one of our biggest bane in the industry.
Fair enough. Thank you for sharing with us those details, Nita. Karan, thanks so much for joining in on the discussion. Well, let's move on.